This is the normal one we run every week. So you can put any questions regarding concept related, psychology related, model building, anything is free game. We'll be posting this after up into the YouTube vid section, as well as the tape reading stream from this morning. Um, Not a whole lot there from this morning, but if you wanted to go back and watch it, that'll be available to you. So we'll start off with a kind of a market review, breaking down how to look at bias in this kind of more difficult PA, and then models on the lower time frame that you could potentially utilize um, for tomorrow or today if you were able to see it, and how to kind of treat August PA in general. All right, so as of right now, we have the weekly open delineated here with this green line, and we have this kind of a retracement coming back up into the range and filling a lot of the inefficiencies that were left over from last week, right? This large obviously dropped down from Thursday, Friday, taking out the sell stops, and now it's kind of a tracing back up into premium, and therefore either we're looking for this as a retracement and a sell-off, or as a continuation higher back up to the all-time highs, which right now is looking like the latter as long as we continuously respect bullish PD rays. Everyone hear me properly? I should be talking, right? Give me a thumbs up. Okay. Yeah, if you can't hear me, well, tell them to restart. But in this kind of scenario, right off the bat, we have August being, top two most difficult months. Typically, you have August and December being those more difficult months that you expect some choppier price action to ensue, more difficult bias, and I don't think it's normally going to be this difficult if you're having trouble with it, but we are stuck within this dealing range, which is almost entirely formed by gaps. So you're going to have a lot of these high resistance moves back and forth. That's going to be harder to read. And a lot of times you're going to be patient to kind of see what's happening, right? Letting the opening range play out and having different approaches is going to be very important in taking any sort of good trades this week and potentially for the future of the next couple of 20 days or so. So as we look at the dealing range we're stuck within right now, we have this short-term high as well as this short-term low, both of which is creating the dealing range because we had ran out the buy stops, and obviously this is the all-time high, and we run out the relative equal lows down here, forming the new long-term low. So looking at kind of the structure and the order flow of things, I don't think it was unreasonable to be looking for, bullish price action, looking up for that all-time highs, given how we are holding here on the 4-hour PD arrays and such. Today is a little bit different. We do not have, in this case, kind of continuation move. In this case, it's used as a retracement back down to this bullish order block with the inefficiency that you see here, and potentially kind of being used as this continuation higher up for the buy stops tomorrow. So whenever you're dealing with a consolidation range like this, you need to be looking for there's a couple different ways you can look at it, but the easiest way to look at it such is to split this into quadrants. You look at premium both in up here and discount both in here, and you actually can take each of these quadrants and treat them as discount and premium as such, right? So this would be premium and this would be discount, this would be premium, this would be discount, so on and so forth. So each of those PD arrays will have some sort of retracement going back and forth. You see it from here, right? You come into a premium range of the entire dealing range, then we drop back into the short-term discount, comes back up into premium of this entire range, and then we drop back into discount. So it's this continuous kind of higher resistance move. It's not really super high resistance, and it's not running stops, but rather just this constant retracement back into the range. So identifying those kind of conditions are going to be important going into today and will help build that bias, because if you're just looking for an energetic run up, you're not going to be able to see the bias clearly as you would if you were looking at it like this, where every single premium PD array is going to offer a discount retracement. And the most important thing that you want to be looking for is where are we within that market maker model? Right? Where are we in the daily market maker model? Where are we in kind of this higher time frame perspective? And therefore kind of filtering a bias from that. So as we're digging up into premium of this inefficiency, as well as the new day opening gap from Wednesday, Thursday. I don't really use these too much, but it's good to just point out here as it is a premium PD array. Coming into the morning, you have a lot of this. If you go back to the 1 hour chart here, you have a lot of original consolidation forming in here, and obviously bearish PD arrays. For it to go from this kind of energetic move here, then a retracement, then another energetic move, for it to open up here inside of premium and then quickly rip for the all-time highs is probably uncharacteristic of the entire week. Okay, is the audio still messed up? I'll restart the stream if it's, we got a couple people who have problems. Good. Okay. Thank you. All right. So, looking at the context and the narrative of price is the fact that we are in premium. We've been offered this continuous retracement expansion. When we open up here at 9 a.m., is it likely for price to open up in premium, leave all these breakaway gaps behind, and then rip for the all-time highs quickly, energetically, right as 9:30 opens up, right? Probably not. Now, that does not necessarily mean we're going to have an outright bearish bias for the morning, but I would like to see how we open up in the morning. So me having, potentially if we were super strong, seeing it just trade up instantaneously to that, unlikely for me. But also, obviously, as we're trading back down into the IRL, that's going to be more of a ERL to IRL type of move. Not that move exactly, but more of a retracement opportunity, right? You don't really want to be trading the retracement here when you can be trading the expansion back up. So with that in mind, it's going to be a lot of more difficult PA to trade that back down than the expansion back up. And that's why I had said in the daily bias this morning, I'm going to let some of opening range print out, right? We are 50-50 at this point. So I said I'm not around 9:30 here. So letting the opening range print out is going to kind of tell me what's going on. Does it want to enter in a consolidation? Does it want to quickly expand for the buy side? Does it want to come back down for the sell side and the inefficiencies? Opening range is going to let me kind of figure that out, right? And the theory behind that is the fact that if we are going to expand for the New York session, then we know that there's key times that we're going to be placing these respective highs and lows of the session, right? On a classic expansion profile, you'll see that this lower high of this respective open high low close of the session will be formed typically during opening range, right? Between the times of 9:30 and 10 o'clock. You can go back in this week and look at all the expansion days, and even the lower probability days normally will follow this kind of time-based rule, as well as the other end of the range being placed in within 10:30 and 11 o'clock. So this is helpful because then if at any point I am struggling to get a bias going into 9:30 and I can't take a trade right at 9:30, and I want to see what data is coming out, this is the day that I'm looking for. Okay, so this is, if you're struggling with bias, this is a gem for you, which is to let that opening range print play out. And if you're watching the 15-minute and the 5-minute, that order flow paired with the 1-minute time frame and how we're holding PD arrays there will kind of be tipping its hand to you to show that, okay, by the end of opening range, this is most likely that high or low of the session. And therefore, we can start to look for that one-sided price delivery that normally happens during the time of silver bullet, right? This time window in here is typically one-sided delivery, meaning the order flow on the 5-minute is expanding towards that draw at that point, and we can take a chunk of it or majority of it if there's a high-quality entry. So letting that opening range play out is a very good tool that if you know what you're looking for and how those PD arrays are supposed to be respected, you have a very late but reliable way of finding a bias for the morning session. And obviously, we're not just the way that we qualify potentially. Let's actually draw it out for the session. The way we qualify is this the likely higher low of the session is by making sure that we have the same exact characteristics of a market reversal, right? This market reversal schematic will be there on the daily, the weekly, and the session perspective. So if we see these characteristics after and at the opening range, then it's most likely going to be the higher low of the session. Simple as that. So what are those characteristics? Obviously, higher time frame PD array, SMT, key time in this case would be the opening range. We have a change in state of delivery, preferably on the 5-minute. And we have displacement with new order flow. And by new order flow, I basically mean that we have this kind of continued displacement with 1-minute or 5-minute PD arrays that are starting to hold towards that new draw on liquidity. Right. So if we see that during the opening range, that'll kind of tip its hand for us for a bias and potentially for a silver bullet setup. And that's something that I would be looking to use in the months of August and December when there's kind of a lackluster bias or there's just harder price action to trade. If I had to just pick one, it's either going to be a 930 scalp because that's likely going to move towards even just a short-term pool, or it's going to just be trading the silver bullet window between 10 o'clock and 11 o'clock and finding that entry on a 1-minute or 5-minute fair value gap towards the obvious DOL, which is either going to be a 15-minute or hourly internal range liquidity pool or external range liquidity pool. Okay. All that to say, just for the bias in the morning, right? That is going to be the most important part, because if we are able to find the bias and we know where the likely draw is, subsequent entries on 1-minute and 5-minute time frames should be following the same schematic that they always do on every single day, right? So with that in mind, as we come into the morning session, I have midnight delineated here. We have, I just want you to notice visually this original consolidation pool here, right? This kind of accumulation happening at the bottom of the gap and kind of being used as this daily market maker model target. And then if I turn on my tail zones and indicators here, you'll see that we have within this original consolidation in here, we have multiple PD arrays, which would be time-based liquidity in London low, Asian low, and eventually the PM session low from the previous day, all of which are liquidity targets as we are trading from that higher time frame fair value gap on the 4-hour, and even moving back from IRL in discount if you wanted to use that. Either one works, but I'm more concerned with obviously those clear DOLs. We have, in this case, very low resistance liquidity all in here. Right? You can kind of see that from move this gap, move this order block. You can see in here going into 930, where is the liquidity? Right? Where is the low-hanging fruit objective that sometimes visually you can see is building that MMXM? So there's consolidation, and then multiple time-based liquidity pools all are available going into the New York session. That can help kind of stem the bias if you're struggling in finding any starting point. That would be something that you could consider. Not something that always that's going to work, but if you're struggling to find anything visually that can assist in, okay, that's, there's liquidity there. We know that even if it's just a manipulation, even if we're bullish, we know that we're likely going to manipulate that low resistance in some way. So we can even just use that as a target. So time-based liquidity there, and there. And then watching the opening range, like I said, is going to be important to see how we are going to react. So we have short-term buy-side pool here, buy-side liquidity, and we also had SMT coming into the opening range on the 15-minute chart between ES and the NASDAQ in here. Okay, so we're not going to be able to see that until 930 prints. So when 930 prints, okay, now we can start to see the SMT forming, but we want to see how the 5-minute is then going to react off of that, off of those PD arrays. So if you look at the 5-minute here, I'm going to clear some of this out. Oops. If you look at the 5-minute, we have 930 right here. We did have 830 news today, but looking at 930, it starts to trade up. And if we look at, is the stream having problems? Let me disconnect and I'll rejoin. Give me a sec. All right, is that working? Oh, no. Is it working now? Give me one sec. If you're listening back in this recording, I'm trying to fix it. Let me see. Hmm. I have no idea. Disconnect and quietly join stage. Waiting endpoint. Yep. I don't know. Yeah. Okay. Anyways, I'll just record this and post it later. But I'm looking at the 5-minute. Do we have any meaningful displacement, right? We're looking for that SB at the SMT up here. Higher time frame PD area is a swing high in this case, with this bias of liquidity here. But is there any 5-minute what? SysD, IFEG, market structure shift? And you're looking for displacement. You're looking for new order flow to be holding, right? So candle closure is one. Fair value gaps and displacement is the second one. So within this range, we see it run up the buy side, and the candle bodies all in the 5-minute are all printing within this range. It just looks like accumulation, right? Just accumulating. Candle bodies in here still are accumulating. Drops back down, takes out the swing low, but does it close all the way down here? It does not. Then the next candle opens up, prints again. This one prints again, closes up here. Through here, right? That'd be a change in state delivery. Does it form the fair value gap? It does not. It swings back up right at 10 a.m. and then it closes back down in here, back inside of the range. So we're not seeing this range expansion that we normally would want to see. And therefore, it's harder to trust any 1-minute or 5-minute PD rays are going to be holding. And that's why using the opening range would be beneficial in finding what that true session target would be and waiting for that 10 a.m. to kind of come out. Eventually, 10 a.m. prints. Eventually, you have a gap that's forming in here. And that is going to be what's kind of showing you, okay, well, it's the latest available time that preferably we'd be forming that higher low of the session. If we came back down, taking out that low, and then came back up and formed a high, very low probability session, right? That's seeking to destroy. Okay, if we start to form lows and highs outside of that opening range, it's already going to be a market reversal profile for the week potentially, or it's going to just be a seek and destroy day that you don't want to be engaging in. Those time elements are very important and are consistent on very high probability and clean days. So gap right in there, swing high being formed at 10 a.m. You have SMT at the highs, buy side being ran out, and now eventually a nice healthy candle closure eventually in here. It doesn't have a true SSD, doesn't like come and print all the way through there, but the fair value gap itself is tipping its hand to you. Okay, so as we go back to the 1-minute chart, you can see in the opening range we have a lot of this chop, right? This is messed up chart. Give me 1 second here. I was missing a candle. There we go. So a lot of fair value gaps and order blocks and such that you potentially could be finding a setup on that, if you're bullish, this kind of 1-minute fair value gap printing on the order block, that's something that you could be looking for as a potential entry, and that's going to get stopped out. I don't think that's a bad trade either. I don't think that using this fair value gap with the order block, getting in there during the macro time, that's not a bad trade. So if you're bullish and reasonably so, that is a good trade. And that is one that, like we covered yesterday, this is the reason that you have a stop loss. This is the reason that you have risk management, because of the fact that high quality trades, if you do not see it and read it right, which you won't, not all the time, you need to plan ahead and understand that losses are inevitable and something that you have to deal with. So waiting for them, anticipating them, and when you eventually read it wrong, having a plan for what you're going to do after is extremely, extremely important. Right, so eventually we drop down. And at this point in time, we're obviously past the macro, so you're going to be having to use more silver bullet-esque entries. In this case, we have the 5-minute gap being traded into. That would be one potential entry for using that. On a 1-minute chart, we don't really have any gap here. We do, in fact, have the first presentation gap being inversed, which if you were to use that, that would be your entry, I guess. A little bit more difficult to see that being used perfectly, especially when we're consolidating like such on the 1-minute chart. So sure, it's an entry, but one that's easy, no, I don't think so. Then displacement, secondary displacement here, outside of the range, that should be showing you, okay, if at this point we have seen that the high of the session or potentially high of the day has been formed within the opening range, right at 10 o'clock, we're displacing again, and we have not met any meaningful objective for price action, either 15-minute or 1 hour ERL or IRL, we can assume some kind of continuation, right? Not all the time are we going to see it, but um, we can see that kind of retracement opportunity being offered. So in this case, we have a fair value gap here, a short-term dealing range in here, and eventually a bearish order block right here, paired with the gap, right? Fair value gap, bearish order block, traded into a 1045. Say you don't want to use silver bullet as your entry, right? That's a little bit more cleaner, right? Fair value gap and premium, kind of consolidation being swept, accumulation, manipulation, distribution sort of thing. But order block, fair value gap and premium, tagging it there. Say you don't like that, it drops down again, changes say delivery, comes back up into premium of this short-term leg right in here, back up into this fair value gap as well as this blue fair value gap I've marked out. This is right at 1050, right? So at that point, okay, now you have another macro time that's kind of on sides with you. That'd be a potential entry in here. Same thing with this, same thing with this. All those are, this is, I would look to use as my silver bullet. Then we have this very, very high resistance move down that eventually tags out the London low and eventually continues into the PM session where it tags out the PM session low from the previous day. But you have this last manipulation leg here, right? High, low, higher high that makes the high of the day. -2, -2.5 lines up with that liquidity pool there. -4, -4.5 lines up with the low of the day there. But I would love to point out the fact that this kind of move in here is in fact generating all of this low resistance, right? This is exactly what you saw over here, all up in here, this low resistance, this high resistance move up, where it's continuously running stops, not really forming any fair value gaps, is generating the low resistance that we're end up going to be targeting in here. And then on the way down, same exact thing. You're generating all this continuous run on stops and lack of any fair value gaps being left open, no breakaway gaps, to then be used as a target for a later time or session. So you can potentially see this being used as your entire market maker buy model back up into here. I would not be surprised if by midnight open we are running this out and we have an Asian move or potentially a London move back up. But this kind of price action is harder to trade if you're not comfortable with it, and if you don't know what you're looking for, you're going to get stopped out. So in August, my suggestion would be focus on finding the highest quality setup you can find in the week. Sometimes it's only going to be 1 to 2 times. You're not going to find a whole lot of moves. So for example, Tuesday of this week was probably the best one. I think that's available. Not to say that these are not, impossible to trade, but I think they're much harder to get real good entries. It's not going to offer me a top tick or bottom tick or a SysD that I'm super comfortable with taking. I'm going to end up having to take a continuation move. Perfectly fine, but you're going to end up waiting longer. You're going to end up taking shorter trades as a result. And the confidence level is going to be kind of skewed towards potentially FOMOing in or maybe over trading, since, if you don't find it on Monday or Tuesday and you take it Wednesday, Thursday, Friday, that's maybe something that you want to be mindful of as you're entering into these conditions. So still rely on the economic calendar. That's still going to be your best friend when finding those kind of moves. But be mindful that, this is a great example that even on 8:30 news days, stuff can still be harder. And you can expect this kind of price action for the next couple of weeks. So be mindful of what you're looking for. take scalps if needed, maybe adjust and refine your model down for low probability conditions. What are you going to do when the model is not there all the time and not offering you the entire session range? Um, I have specific rules for low probability conditions. I'm typically looking for um, more scalps, like type trades, meaning I'm not looking for high to low session and taking that entire range. I'm taking partials, right? That's always going to be a part of my rule, and potentially heavy partials, meaning the first partial that I take may be 50% or 80% of my position, and I'm only leaving 20% on, compared to the first partial is maybe 20% and 80% is left on for the full TP. So you're taking partials, you're accepting risk, right? Accepting risk. If you are getting in a good entry, that stop loss placement is going to be much harder to be trimmed, right? So you have to accept your risk. If you're instantly getting in a trade, and as soon as you see a 1 minute shift and trimming yourself to break even or trimming it to a point of invalidation on a high probability day, on a low probability day, that's going to get swept, as you see all in here, run on stops continuously and just kind of a funky PA, and then move back lower. So accepting risk is going to be a big part, taking partials is a big part, and obviously understanding that a better move is always coming. So not forcing anything that is not in line with your bias, and understanding as well the 5-minute order flow is going to protect you a lot of times in this case. Just reading the 5-minute, making sure that's starting to print in a healthy manner. Therefore, you can start to trust 1-minute PD rates are starting to hold in line with that drawn liquidity. All right, so but by no means is this easy, but I do want to give you tools for these days, for both from the market review we had yesterday and from this market review here, on potential tools that you can use in these kind of conditions that are going to benefit you in finding winning setups, right? So the thing I would say to take away from this is understanding how to read the opening range if you want to wait and let that print out. Very useful tool that's reliable. You're not going to get the whole move, but as a result, you may get a winning trade because you were patient. And then as well, looking for this 15-minute low resistance liquidity a lot of times can help and assist in where is the short-term draw, right? So looking at every single 15-minute day on the 15-minute will have this kind of liquidity that's available. Is this low resistance kind of retracement style of, deep retracement style of liquidity forming in here, where you don't see a lot of these breakaway gaps being left open. A lot of them are just being continuously used. You got a flush there. You can go back in and back test this kind of theory, but sometimes it's intraday, sometimes it's from intra-week, sometimes it's from a previous week. But understanding that and using that is another tool that you can use, another coin on the scale that when you have other things stacked with it can be very beneficial. All right, so explore the silver bullet, explore the things that I mentioned in here and see if it's true and reliable for you. Tomorrow I'll probably look still for setups if it offers it to me. And same exact thing there. I love to see if it's a good bias, but I'm going to be a little bit more hesitant in taking entire ranges of trades and rather just take a scalp if it gives it to me and be done with that. All right. If you got any questions, you can DM me. We'll probably just do another Q&A since this one flopped and Discord is being a little funky. So we'll do a Q&A and psych session either later today or tomorrow. And this will be posted as well as the tape reading stream. So hopefully you enjoyed this little recording, and take care as usual. Do the things that are necessary to succeed. And I'll talk to you guys soon. Peace.